Welcome back. You're watching Stock Picks, and joining me to unpack a Foresight, PBT Group, and ISA Holdings is the Financial Mail editor, Marc Hasenfuss. Marc, always a pleasure. Good afternoon to you.
Good afternoon. Nice to be here.
Brilliant, Marc. Marc, is there a theme today? When I was reading earlier, it looked like there was a theme.
Yeah, there's a little theme. There's a little theme. There's always trying to have a theme, I suppose, difficult as it is. Yeah, so these are all small, very small IT companies. And I guess the reason I chose them, they are obscure. And I suppose people would know the bigger ones like Mustec, etc. Data tech. Those are I suppose if you can invest in IT, you'd invest in those companies. These are very much below the radar, but I'll tell you, they're not bad little businesses and probably worth looking at. And just be warned, not easy to get hold of these shares. You're going to have to exercise some patience, probably have to put a very long bid order in to get them if you want them at the right price.
What's so interesting about them is a lot of them have actually been around for quite a long time. I think if I was to read on ISA Holdings, that's been around since the 1990s. And Marc, these are legacy businesses, and maybe even being small or microcaps actually works in their favor as counters.
Yeah, so look, I mean, that 90s listings boom, I mean, I think you must be a little too young to remember all that. I'm an old guy, I've been around a long time. So I remember when that tech rush came to the market, democracy in South Africa and suddenly opportunities. Every man who found the web ran to the market with a briefcase, and there were literally hundreds of RT listings. ISA was one of them. A little bit different, singularly focused. Somewhat, in a strange way, reminds me of something like Bowler Metcalf. They came to market with an idea, they stuck with that idea. They didn't make acquisitions, they didn't splurge money, they allocate the little capital they have quite well, and they've always been in the security business, which is brilliant these days. But it's a sweet spotting technology. You've got to have security. You can't let people hack your systems, ransomware, mail attacks, phishing, all this kind of stuff. And I think regulation and legislation, you have to have security systems in your tech framework. So it's a good business. Like the others, it doesn't have its own proprietary software technology, and that is the problem. So people say, oh, box droppers and things, a little bit different. The story with ISA is that it used to be with a software company called Checkpoint, and they were doing very well, solid results, paying dividends throughout the years, and then just suddenly Checkpoint just dropped them. They moved them from I think a top vendor to like the lowest rungs of the vendor. It was actually the end of ISA, I thought, because now you can't just lose your software partner. But they rebuilt. They found other partners, and I think the share went down to something like 40 cents at one stage. Sure. They've rebuilt the business. The guy who runs business, Clifford Katz, he's the owner. He's the biggest shareholder. He's a smart guy, and he managed to get other software licenses, and he's rebuilt the business quite commendably. I mean, the last set of results were pretty decent. Very nice, strong second half. So I'm quite encouraged. If you're looking for a company that pays out of a lot of its cash flow in dividends, not a bad little option to have on the sideline.
What we often hear about these tech businesses, like you're saying, Marc, it makes sense at some point to develop your own software and to distribute that. Is that something that they could possibly be looking at, specifically because cybersecurity issues aren't going anywhere? In fact, it might get a little bit more intense with AI coming into the realm.
Yeah, look, I suppose it's always possible. I get the feeling that these guys offer solutions, the package solution. They're pretty good at that. Clearly got a good customer base that they can tap. So I'm not sure about if it's worth taking on the giants in this game. It's probably not worth it, to be honest. I mean, I don't want to malign the company. I'm sure they could, and they might. I don't want to say they won't, but I somehow doubt it. I think they'd stick with their current game plan.
And then I must ask you about just the listing aspect here. Sometimes if a company is this small, Marc, it might make sense for it to be delisted, privately owned. I'm keen to get your thoughts on that dynamic.
Absolutely. I think in all three cases, well, no, not all three cases, but certainly in ISA's case. Yes, I think the shareholders are in there, aren't unhappy. They've got brilliant dividends over the years. But I mean, the owner, Clifford Katz, he might just say, well, I'm getting nothing out of the market. I need to raise capital. I've got cash on the balance sheet. I'm generating cash. I don't need to use the market for anything. What's the use of sticking around? I'm not getting a rating or anything, and he might just go. There'd be no indications that he will. But there's possibility that someone even buys him out. A bigger company say, well, this is a nice addition to our portfolio of services. We'll buy you out and offers a good price. That's always possible.
I also want to move on now and look at a PBT Group, also a very, very interesting business here, Marc. Let's talk about this one. It also has a bit of a global footprint there, and I think I was just reading on it. It sounds like the owners are very keen on, being more of a management consultancy kind of a business.
Yeah, so this is an interesting history. So back in the day, the Prescient Asset Management Company, when it listed, this was part and parcel of the listing, strangely enough. And when Prescient delisted, it left these assets behind. It was primarily servicing the healthcare sector, financial services to the healthcare sector, or the healthcare financial services. It's grown quite a lot. As you say, yes, solutions is what they want to do. And just, you mentioned the global reach. That's no longer the case. It's just 3% in the UK. The Australian business, they have shut down, which is a good move. I think, the thing was underperforming. And I like a management team that said, look, we're probably not going to make something here for a while. Let's move out. And there was a bit of a bright side to the Australian venture. There was an investment that they made through the Australian company in another little tech company, specialized tech company. I think they yielded something like, it might have been 150 million from the sale of that, which was a nice little comfort patch for having to exit Australia. But yes, it's a good business, good margin. Again, it is mainly solutions. I think there's an annuity angle building. It's done very well so far, and probably a little bit unrecognized. So an interesting one to look at. I think it's not the most exciting business. I'll be honest with you, but it churns decent cash flows.
What is also interesting, I think, when I was reading my reading on PBT Group, Marc, is it's also one of those companies that's on the forefront of data solutions. Of course, when the company started back in the day, big data was not a term we saw being thrown around quite a bit. And so what I think does help this company, and maybe its investment case in the future, is that it could be right on time and at the fore of being one of the few listed data-driven companies.
Yeah, you're right. I mean, I can't say this with authority, but I suspect that with what happened at EOH, I think they picked up quite a bit of business. It helped shape and morph their business to do these new areas. So, yes, I'm sure they will build on that. I mean, there seems to be quite a vibrant little niche inside there. So, yes, I think they'll probably push quite hard.
Now, the most interesting one, I think, of these businesses for me is certainly Foresight. I think a very, very fascinating business. I'm keen to get your thoughts on this one. The 4IR right in the middle there. I think we're all trying to figure out what 4IR still is, but it looks like a Foresight has that Foresight.
Yeah, I think the fourth industrial revolution is not a term you hear very often these days. I think it's already become passé. But yeah, look, just some. It's an interesting business. Got into a lot of trouble after it listed. And it was a hell of a mess, corporate governance-wise. The Mauritius listing was a mess. So the vendors basically who sold their businesses into the company then took charge, which is a good thing because they've got skin in the game. And they've slowly tweaked and turned the business around. I picked this up a while back that they just seem to be getting certain things right. But obviously, when you've had controversy at a listing, the big investors will stay away. It's not worth their while to look at it. And they've done quite amazing. The latest set of results is very good. The only problem there is it is a 12-month period, but they've had to extend their year end. So you'll only probably see a dividend at the end of the extended period. And I think the dividend for me in a company like this is quite key to see what they're confident enough to pay out as a dividend against their earnings. But so far, so good. They seem to have a good spread of businesses. It's still chunky in certain areas, and I think they need to build in other areas. But from where it's been to where it is now, it's actually a remarkable turnaround story. So yes, quite an interesting one to look at. Just having said that, I do think people got a bit excited ahead of the 12-month results release. I think they ran the share too hard. I think I've said as much in my editorials. I did expect it to come back a little more than it has already. I think it's not a bad level to be looking at now, but I think it can't command a 20 PE at any stage yet. It's got to prove its track record, so maybe there'll still be some opportunity to buy it at a very good price.
I must also ask you, Mark, we often speak about the fact that there aren't enough or there isn't any real AI player here in South Africa. Could Foresight be the closest thing we have to an AI player, as you know, where we could, even if it's not in the manufacturing there, but it really in the ability to be thinking about AI and how it could be rolled out here in South Africa?
Yeah, look, I'm always a little bit stupid on the tech companies. That goes over my head, but I understand from them that their main mission is to boost productivity. So it's factories, mining, etc. So yes, AI is huge in that. You and I know that. So if they're applying those models, yes, this is probably an AI play. I mean, that will come into their business model more and more as they kind of adapt businesses to be more efficient. So if you're going to stretch it, yes, I'd say it is.
I must also ask you here just about looking at the valuations of these three entities. We know that they are relatively small, Mark, but I worry and think we might have touched on this in the past looking at other tech businesses, that there isn't much liquidity for them. What that means for their prospects, on the JSE, but also for growth.
Yeah, as I said in the beginning, these shares are all difficult to pick up. They're highly liquid. Foresight's a little bit different. I think it does trade a little more than the others. They don't need cash. They don't need to have rights issues. They don't need to raise capital. So it's going to stay like this. I kind of think if anyone's going to go, it would be ISA because of their kind of shareholding structure. The others, I think they still value a listing in terms of their business. I think it adds credibility. And I think in ISA's case as well, it's good to be a listed company. It's something you can show around when you marketing yourself. So it might not be the case of them all disappearing, but yes, I agree with you. Yeah, these aren't liquid stocks, and they're not poster children for the tech sector in that regard.
And if you had to rate them or rank them, Mark, which ones do you like the most? Well, I think we might have very similar lists here, but I'm keen to get your thoughts.
Yeah, interestingly enough, I'm a shareholder in Foresight, very small shareholder. I had some shares when it recovered, and I thought I'd take my profit. At the moment, I'd rank them third because they're still quite unknown. There's still a lot of unknown there. PBT's got a longer track record, so I'd rank them second, even though they've got a bigger and better spread than ISA. ISA, I just kind of trust the owner. I think he's done very well. He is lean and mean. There's no wastage. He's paying out the cash in dividends. Probably the place I'd like to be, number one.
And with that said, keen to get into our educational segment for today, looking at microcaps.
I mean, I suppose I brought that up because we're looking at very small companies, and I just looked at the definition in the US market of a microcap. It's something with a market cap between $50 million and $300 million, which in South Africa would be pretty much a mid-cap stock on the top end of that scale. But what was actually amazing, and I had a look around the JSE, you've got what you call classic, I suppose, microcaps like Core Potash and Vunani, the financial services company, that 400 million, 500 million rand valuation. But then you've got the most bizarre situations. You've got companies like Arvest, which makes well-known tomato-based condiments you can buy on the supermarket shelf. You've got a market cap of 2 million rand.
Sure.
I mean, that's, I'm not trying to be flippant about it, but that's, it's pocket money for some people. It could buy the entire company. And you've got Nictus, a little furniture retailer. I think it's got maybe 2 or 3 stores. It's, 26 million rand. There are various others that are small, that are so tiny, it's quite baffling. I mean, I'm not sure that I'm saying any of these are worth looking at, but some of them, like Nictus, are fairly profitable, pay decent dividends. How you get the shares is another story. But I suppose also the important differentiation here is that a microcap is a lot different to a penny stock, because some of these shares can trade at 10 rand or 3 rand, not at 1 or 2 cents. It's just that there are no shares in issue, and it's very, very tiny. So tiny, it's quite. I just can't believe it when I looked at these things. It's bizarre.
And earlier, Mark, I was actually speaking to an analyst, and he spoke about, believing that as the market turns tide here, SA Inc. may get a second looking. Emerging markets actually may get a second wind. And I'm wondering if these micro caps, even some of the smaller counters that we speak about here, could actually be at the center of some of that growth rally in SA Inc., especially as we start to look away from the United States and interest rates might even start to fall.
Yeah, if we get a bit of an upsweep in, emerging market sentiment, and we get, we've been short on that share of spend, I must say, over the last few years. China moves up, yes. I think certain microcaps, I wouldn't back some of these that I've listed. I haven't read them all out, but I think some of them are quite scary. I think companies like Vunani are fairly decent. Core Potash is interesting. It's a food security play. But I think the small cap space, that would get a massive sweep. The classic small cap space, the JSE, I think a lot of those shares I've just written a cover story for the FM about it. Some of those shares are dirt cheap. I mean, no matter where you look at it. Then again, there's an election looming. So, yeah, you've got to take the discounts into consideration there.
Brilliant, Marc. An absolute pleasure having you on Stock Picks. It's always a pleasure talking to you. That was Financial Mail editor Marc Hasenfuss.